what if all of the 2020, 2021 cycle didn't have actually anything to do with a 4-year cycle? It had everything to do with COVID and the fact that we printed $5 trillion and every asset in the world went up. It just happened to be that crypto moved faster. And so everybody imprinted this thought, oh, we're continuing the 4-year cycle again. And so then it became, 2's a trend, 3's a pattern. It became a pattern. So then everybody is using pattern matching to suggest that 2025 will be the equivalent of 2021. And then we're going to drop just like we did in 2022.
This episode is brought to you by Aries Markets. Aries Markets deployed on Aptos in 2022 and is now the largest lending protocol with $280 million in TVL. To learn more about Aries Markets, follow the link in the show notes below. Hey everyone, this episode is brought to you by Uniswap Labs, who is launching the largest bug bounty program in the entire history of crypto. It's a $15.5 million program. This is aiming to be the most rigorously reviewed code base ever deployed to Ethereum. So if you want more eligibility on the scope, rewards, payouts, etc., just click the link in the bottom of the show notes, tell them that I sent you. You'll be hearing all about Uniswap Labs later in the program. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2 and Vance. And fellas, before we get into it, just want to give a quick shout out and thanks to this episode's sponsor, Aave. Aave is one of the most trusted, oldest brands in all of DeFi. They've got $20 billion worth of TVL. And if you want to do anything, borrow, lend, swap, whatever it is, just head over to Aave. And thanks again, Aave, for making this episode possible. All right, guys. It's been a minute. How's the break?
Excellent.
Another day, another dollar.
Just another week in the trenches,
Yeah. How was the year? How's the start been to the year for you guys? I feel like it's been maybe a little bit of a sleepy start to the year for whatever reason. Even when we're coming up with stories and whatnot for the roundups, like there's interesting stuff to talk about, but there's not a million things going on. I mean, how are things going on your guys' end?
It's definitely been slower, I would say. I think a lot of people wanted to get stuff done by the end of the year. So Q4 was very busy, and it kind of ebbs and flows from a venture perspective in that way, where everybody works towards kind of like some timeline, trying to get a fundraise done, but then the next quarter or the next 2 quarters, it's a lot slower. I also think that there's a lot of protocols that are waiting to launch or in the process of launching, days to weeks to a few months away from doing that. There's probably like 10 to 15 pretty notable ones. And so I think that kind of sucks the energy and attention out of, new stuff starting. So yeah, that's frankly where we've been spending a ton of our time. It's just like on portfolio company work, helping them prepare and get ready and eventually launch.
So I want to ask you guys about, it's Q5, right? So, I want to get your guys' take on Berachain here at some point. One thing I actually, have you seen this stuff about the Trump ball, like the crypto ball and everything?
Yeah.
And we also got some, so I guess I'm curious if you guys are going to this Trump ball. I saw Kyle Samani tweeted out. I don't know what the invite list looks like, but I also saw that there were some executive orders potentially that Trump was thinking about signing in on day one of freezing enforcement actions that were initiated by the SEC. And I found this super interesting because I think people who are very optimistic about Trump's impact on cryptos. It's going to take a little while. This isn't going to be his, day one priority, but it feels like he's, that feels good that he's trying to deliver on promises that he made to the crypto community. So I don't know if you guys have any thoughts on this, but it seems like he's really leaning into the crypto side even more than I thought he would.
Yep. I wrote them down so I could remember them. So SAB 121 is the first one, which basically right now MicroStrategy holds their Bitcoin at cost, and if it goes down, they have to take an accounting impairment.
That's true. SAB 121 is specifically for depository institutions, though.
It's for public companies. MicroStrategy follows this. Basically, what this means is like every single earnings where Bitcoin goes down, they have to have a write down, and when it goes up, they don't. So that's pretty hard for a lot of crypto companies, especially something the size of MicroStrategy to have. But once this gets repealed, basically what they're going to have is a revaluing of their Bitcoin on their balance sheet that will then count as earnings. And if you go on r/MSTR, it's been a pretty brutal message board over the past like 2 months. And it's totally different than crypto Twitter. It's a lot more normie-esque. And basically the one catalyst that they're saying is, MicroStrategy to 1,000 once SAB 121 goes live or gets repealed actually. So I forget how many coins he has, but I know his cost basis is around 30 grand per BTC. And so you're at 100K at the moment. And so you could have, tens of billions of earnings being amortized in like a single quarter or two, which, would put the PE of the stock like at, 5 or 10x and be a catalyst for it to go up, be a catalyst for it to issue more debt, be a catalyst for it to buy more Bitcoin. And like the cycle keeps going. And if you've ever listened to the Michael Saylor MicroStrategy calls, there's three things that he says will propel Bitcoin to 5 million. The first is a repeal of SAB 121. So that's going to happen. The second is a Bitcoin ETF that has already happened. And the third is a national strategic Bitcoin reserve, which is the second thing that we've heard that Trump will do. And today, he said, or someone said in the government, that of the 200,000 Bitcoin that the government holds today, 120,000 will be given back to Bitfinex from their hack. And so that's 120K going back to Bitfinex. Also, that's so much money going back to them and like the Tether people. And like, not that they needed it, but like they're going to continue to be a huge force even without that capital injection. So that leaves 80K in the US government. And I think that's, I guess that's like, what is that, 80 billion or 8 billion? Somewhere between 8 and 80 billion of Bitcoin that they will have on
I'm
their
not going to
balance
do that
sheet.
math on the spot.
Yeah, I'm not going to do that math on the
No
spot.
shot.
But that will be the start, we think at least, of the strategic Bitcoin reserve. I don't think the Lummis idea is going to happen. Senator Lummis has a bill which says we're going to buy 3 billion of Bitcoin a year for the next 5 years. But even the US government holding and acknowledging and committing not to sell their BTC is a huge watershed moment for the asset and will force other countries to buy as well.
Yeah, I think the real big effect of the repeal of SAB 121, it depends on how it gets implemented. Specifically, the SAB 121 is for depository institutions. If they factor in publicly traded companies, then the MicroStrategy stuff plays as well. But just the repeal of it allows for depository institutions, and specifically the accounting treatment is when you have crypto on your balance sheet as a depository. Well, as a depository institution in general, you have requirements on reserve requirements and liquid assets that you hold basically as backstop for the deposits that are coming in. And what SAB 121 did was it said for depository institutions, you have to hold a liability on your balance sheet commensurate to the amount of crypto or Bitcoin specifically that you have on your balance sheet as well. And so you can imagine this as, hey, I've got a dollar that comes in. I have to hold a certain amount of dollars as Basel requirements for banks. And it made basically the business model of banks impossible if they wanted to hold crypto on behalf of their clients. And that repeal would basically say, hey, just like you hold stocks at this bank or you hold other foreign currencies or other assets as collateral, we don't have to represent that as a liability on our balance sheet and therefore destroy our reserve requirements. And basically, this is the thing that will open up all of the banks being able to custody crypto on behalf of their clients. And none of the depository institutions have been able to do this so far. You've got Fidelity who can do this, who's not, a depository institution. There are a couple of others. Obviously, BlackRock is not, and they're just a facilitator of the ETF. But the likes of Goldman, JP Morgan, Morgan Stanley, they have not been able to touch crypto because they haven't been able to build a business around it because of this specific accounting treatment. And I mean, we've talked with some of the leaders of the digital asset group or, whatever their departments are at these banks. And they've been waiting for the last 1 to 3 years, ready to go. They've got, clients who are asking about it. They've got, the infrastructure ready to go. They have a team in place that have been waiting for, things like the repeal of 121 for years now. And the second that happens, it's game on. And you can imagine there's the BlackRock effect of what we've seen from the ETFs in 2024. 50 billion of inflows, and they said they haven't even really started selling it. But imagine what happens when you have all of the banks who also have client bases similar to BlackRock, who are now able to say, "Hey, you want to give us your Bitcoin? Great, we can hold it, and we can give you a loan against it. We can hold it and have it be with all of your other financial assets that we're managing as well." And so I think that opens up just like another BlackRock level opportunity, maybe even multiples of the BlackRock opportunity that we saw last year, just in terms of inflows of traditional finance, traditional financial capital flowing into this asset.
I want to get a sense for you guys as well, just in terms of, there's been a lot of movement in the markets the last week or so, and this is where we're going to make it a macro pod for 5 to 7 minutes and get your guys' take, because it seems like what people are worried about is Stokes or restoking inflation fears. So we had a relatively soft CPI print come in, like energy or oil was a little bit hotter than we ultimately would have liked, but a bunch of the categories came in relatively soft. And, we were talking, Vince, I know you mentioned before you listened to, one of Felix's interviews with, I'm blanking on his name, the new
Stephen
Miron. And, I think it's interesting to think about just the macro situation for Trump going into, when he gets inaugurated on January 20th, because he's going to have relatively high yields. He's going to have a relatively strong dollar, both of which are tools that he could use, from to actually, inject some liquidity into the system, and as frankly a negotiating tool with the rest of the world, right? So I don't know what your guys' perspective here on is, like where we sit from a markets perspective. And I mean, already, if we'd been recording this podcast on Monday, it would have been a very different one, because we're back at almost 100K Bitcoin already. So maybe it was just a silly little blip that everyone should ignore. Or what's your thoughts on just state of
I hope you didn't sell the bottom.
Yeah.
I hope you didn't. That was like the easiest bottom ever to not sell. I mean, that was like crazy if you did.
It would be really funny to think like, it just is over a week before Trump takes office. Maybe there's a 1% chance, but we certainly didn't sell anything. So I think the TLDR is that both rates and the dollar are going to go down a lot. And, those are the two things which determine how easy financial conditions are. And this interview with Stephen Miron and the paper, which is titled A User's Guide to Restructuring the Global Trade System, is really interesting. Stephen Miron, for people who don't know, is the chief economic advisor and the chair of the Council of Economic Advisors for Trump. And so he's tasked with working very closely with Scott Bessent, who's also put out a number of interviews, which are basically simpatico with what Stephen Miron is saying. And Stephen Miron, basically what he's saying is, first thing is, we're putting tariffs on everybody until you acquiesce to our demands. And what are those demands? They're twofold. One is we want you to revalue your currencies upwards, which, frankly, if you look at the Brazilian real, if you look at the Canadian dollar, if you look at the Chinese renminbi or the Japanese yen, all of these currencies are at 30-year lows. Mm-hmm. So there's a very legitimate argument as to, why those currencies should be higher. And his argument for why the US dollar is so highly valued is look, these countries are price insensitive acquirers of the reserve currency of the world, which is US dollars. And so basically the second part of his plan is saying, we're going to slap you with huge tariffs unless you revalue your currencies. And how are you going to revalue your currencies? Well, we want you to sell all the dollars and short-term T-bills that you have, and we want you to buy our century bonds. So 100-year bonds, and the mechanics are you get them to sell the dollars, the dollar goes down. Yields go down with it. Then you term out the debt, because one of the biggest drivers of the deficit in the US is the fact that we spend $1.3 trillion a year on interest expense.
And that's expected to triple in the next 2 years.
Right. And the reason it's expected to triple is because we've issued all of this COVID debt right at the apex of that crisis. All of that debt is at 1%. And if you kind of roll it right now, you're going to have to pay 4.5%, which even increases that deficit. So all the stuff that Doge is doing, all the stuff that people want to cut from the government, it's like, you know, pennies in comparison to the impact of a lower dollar, lower yield, and terming out our debt for a century. So that's kind of part of his plan. And then the other part of his plan is basically like this Mar-a-Lago Accord, where for friendly countries, we say, you know, look, security zones are a public good. We, you know, provide even security to oil in the Middle East for people like China free of charge. You know, we're kind of like occupying that country. And so we have to defend it anyways, but China and other allies benefit from it. And basically, it's just saying, like, look, you have to continue to revalue your currency until we are comfortable with the level it's at. We'll bring export manufacturing back to the United States. And in response, we'll continue defending all the sea lanes, you know, all the common economic zones that you have. So, like, very, very unorthodox. And it very much flies in the face of, you know, Adam Smith wrote a book. It's on free trade. It was like basically canon for like 200 years. It was written in like the 1800s. And basically, like, the argument for fair trade is kind of the argument for like value investing, where it's like, you know, don't worry, the market will eventually get rational, or like, don't worry, we'll keep all the free trade with China open, and eventually they'll run out of money to subsidize their, you know, aluminum or copper or coal industries, and, you know, dump those goods. We'll stop in America. And I think basically what he's saying is like, that's all horseshit. And there's a new economic model which makes sense for the U.S. And the people who get tariffed, like, it's not like we're going to make ourselves poorer. It's those countries that will pay the bill. So that's kind of the whole framework for it. So I think generally financial conditions get a lot easier.
Yeah, and just to piggyback on that, I mean, just this morning we saw core CPI come in slightly lower than expected. I think we're going to start to see inflation slowly come down. You're looking at the lag effect primarily of rent and housing, which is delayed, I think, 15 months on average. And so even if housing went down like this time last year, we still have months of CPI print where it's artificially inflated based off of the way the calculation is done. And that basically gives credibility to the Fed to drop Fed funds rate. But ultimately, what you can expect is a lower dollar also has the same effect. But it also drives imports into the country or exports from the country, imports to other countries, because the cost relative to other countries to develop products and services is lower. And so, you know, it was a strategy, I think, in the previous Trump administration, we're going to make the dollar strong. But I think now everybody's kind of come around, and it makes more sense to have a lower relative dollar relative to the core currencies of other trading partners that we have.
And yeah, go Vance.
It also mirrors exactly what happened the first term of Trump. And there was, you know, COVID, and I guess not at that point, but like, Trump says rates are too high. He says the dollar is too high. Like, I think you can either take the position of like, you're going to fade Trump, or you're just going to like follow Trump. And I don't know. He's given you no reasons to fade him so far.
Yeah. It's very interesting times. And yeah, there's definitely, there was a great, I'll link it in the show notes about, or Fed guy, Joseph Wang, actually wrote a piece on, yeah, you can't actually treat tariffs. Tariffs actually depend on what the current economic situation of the world actually is. And mostly the way to think about these things is just redistributions. Like, the other way that, you know, you can interpret this like massive emphasis on global free trade is, yes, it creates economic surpluses, but that doesn't mean that the economic surpluses accrue to everyone 100% evenly. They actually can create massive imbalances over time, and tariffs, if used properly, can be a way to rebalance, at least temporarily, some of the imbalances that get created from.
There's a great clip. I think this was even pre-election, or maybe it was right after the election, from Howard Lutnick going on CNBC. And he asked the question to the other people on the show. He said, so we implemented tariffs as part of the Marshall Plan, where we tariffed ourselves to help rebuild and basically export our economy to Europe, so that they'd be able to bootstrap, you know, our demand, but they would be able to sell us products, and we'd pay extra for them, basically to help, you know, build them back. And he asked the question. He's like, when do you think those tariffs ended? You know, if the war ended in 1945, in the 70s, in the 80s, 90s, what if I told you we're still getting tariffed, and the US is still paying extra for all products that come from Europe? And it's just a crazy phenomenon that, nobody I think, at least in the modern times, has looked at tariffs as an angle and basically a lever to be able to pull on the economy. And you don't actually have to use the tariffs, but to all the things that Vance just described, you can use them as a tool to get other things done. And I think that's what we're going to see. And yes, like what we've seen over the last few weeks is just like general uncertainty. Like this is a new thing. We don't know exactly what's going to happen, but I think ultimately nothing has changed. The plan is still intact and it's actually getting implemented, and it starts next week. And we're going to start to see some quick changes, the crypto bills, the stuff. I'm sure there's going to be other stuff too that, isn't just in the crypto repeals. But going back to that in terms of, what gets implemented, I think the first week, you see some of the things like SAB 121. You see Paul Atkins basically put a freeze on, existing processes with the SEC or enforcement actions. One big question that I have is like, what happens to all the people that receive Wells notices where a lawsuit hasn't started yet? I think Uniswap is in this camp and a number of others. But with Coinbase, for instance, the law and Ripple, I think the lawsuits have started, and so you can't necessarily just like pull those back. But it'll be interesting to see like how quickly those things change, and I think that's the short term. The medium term is probably economic changes driving growth in all sectors, tech and AI and crypto broadly will be the most beneficiaries. But then the longer term, and this is something we keep coming back to, is probably second half of this year, we're going to see that market structure bill. And, in the timeline of the cycles, later half of this year would suggest that's when we're seeing peak pricing. But what if we're seeing peak pricing and the most seminal piece of legislation that basically defines the entire industry and the largest company in the history of the world, largest economy in the history of the world, happens right as we're peaking? Do we start to break the 4-year cycle? Do we start to change the trajectory? I think I saw Chris Bernisky posted something on this, and I've been also thinking a lot more about this, but I think there's a world where 2025 starts to prove out the breaking of the 4-year cycle.
I'm slowly getting in this camp as well. Even just from an operator seat at Blockworks, this isn't mirroring what has happened in the past.
Exactly.
The trends have already been broken from my standpoint. Like if you went back and looked at our revenue and what we've from 2019 to 2022, it was basically operated on a 9-month lag of what was going on with crypto prices. And it was like crazy growth, especially towards the end. And it's kind of in the last 2 years has been steady growth, right? Like 2023 was where our revenue bottomed out. And it's like growing very nicely, but it's not crazy. There's not crazy blockbuster audience numbers. And I think sort of mirrors the sentiment that you see out there on crypto Twitter where, it's been a really good last couple of years for crypto assets, but there's a lot of dispersion. Not everyone has just been able to win by holding majors anymore. It feels like it's actually growing in a more sustainable, almost organic kind of way than it has in the past. Does that
100%. This is what happens when markets mature and the market structure gets developed and defined, which is it's not just what defines your success. And like maybe one of the core examples, a large industry. I was having this conversation with a buddy last night. How do you define the success of, or you can even say the valuation of all the 32 NFL teams that exist? 95% plus of the value gain for each of the NFL teams has been just in the market beta of the NFL itself. Sure, the Cowboys have done better. They've built a better brand than the Jacksonville Jaguars, et cetera. But you don't really have too much movement in terms of within the core industry. How much have you been able to supersede everybody else? And it's just been market beta has driven the success. And I think that's where we have been as a crypto industry the last couple of cycles, which is now becoming less the case, which is market beta has been what's driven success historically. And it's been more about market timing as opposed to like the actual assets that are doing well within the category. And you can't just and I think other podcasts, even Blockworks ones, are starting to get wise to this too. You can't just buy a basket of assets and be like, all right, I'll check back at the end of the year and see where everything is. Like you actually do have to make sure that you're in the right assets because those are the ones that are going to do way better. And, selection is from a liquid perspective is the most important thing at this point. And I think we're at that transition. And this is part of my thinking around, market structure is now defined. You can't just buy a basket and yes, the market will go up and that will help provide a higher watermark for where these things could go. But it's not just, spray and pray and check back in a period of time.
Yeah, I mean, imagine in 9 months, ETH is at 12K, Bitcoin's at 250K. The market is going to be a lot less about the majors for the natives, and it's going to be more so about venture, liquid, on the middle or long tail, actual things that are buying back their tokens. I guess kind of like, meme coins will be a part of that, but like market beta will not be driving the market, to Michael's point. Like it's going to be like, okay, the NFL is now the biggest sport on the planet. Like you better be the Kansas City Chiefs if you want to double your valuation. Like, and I think that will take longer for a lot of things. A lot of the deep in stuff that we're looking at is like, yeah, this is going to be a multi-year journey. And so it'll be harder and that'll be okay. But, I think it's funny. It's like, people will sell their crypto and be like, I'm going to go speculate on equities. It's like, that shit takes even longer than crypto. Like, good luck. So, it's going to get harder, but I think that's fine. And, I think at some point we're going to see AIs trading crypto coins based on fundamentals, and it'll be kind of like, how the analytics revolution came to basketball, and people are just like chucking threes or like the teardrop 2-pointers, and it's like more kind of maybe like mechanical, maybe less inspiring of a game. But I think that is kind of how a lot of this will manifest with, over the next year, if we get AGI or ASI or whatever you want to call it. I think that and buybacks are going to be the two primary flow drivers outside of kind of liquid funds and crypto. So I think there will be a lot of things that change even in the market structure. And the last thing I would say on market structure is if you look at the market structure bill, it does provide a pathway to commodity status for decentralization, for whatever you want to call it. It also has a lot of rules that come with it. You need to disclose when you sell. You need to tell people who you are, what your token address is. Like, I think a lot of the cloak and dagger that happened with meme coins, and I saw the Berwick Law lawsuit against Pump Fund today come out, will come to a close. So I think like the crime cycle is probably going to be an abbreviated one, because the market structure bill just straight up does not allow for that stuff to happen, or at least as it's currently written.
Yeah, imagine all founders. So when you're the founder of a company that is publicly traded, you have to file what's called a 10b5-1 with the SEC. And everyone, tracks like, oh, the CEO is selling shares or the CFO is selling shares. What do they know? Turns out they filed that document with the SEC and basically gave authority to whatever their bank is to sell those shares at predetermined times or values or prices. And so the time when they decided to sell was probably a year before the selling event actually happened. But that's exactly what's going to happen with founders of token projects and investors as well, which is you have to basically disclose what your holdings are, where they are. And if you're the founder or an insider to the company, you're going to have to disclose, you're going to have to build a plan around when you sell and have that be basically filed with the SEC. Maybe not the SEC, whatever the regulator is, but it'll be the equivalent.
If you liked Pump.Fun, you're going to love Disclose.Fun, where you're just filing 19b4s for your fucking meme coins. And like, it's going to be really onerous, but a lot of the concerns that have been raised by people in the crypto Twitter community are going to be addressed, where it's like investors have staking awards that they're allowed to sell, like never happens again against the law. Probably also curtail some of the Wild West aspects of it. But a certain portion of this market will always live overseas.
Quick shout out to today's sponsor, Aries Markets. Aries Markets deployed on Aptos in 2022 and is now among the top 10 lending protocols across all blockchains with $280 million of TVL. Aries Markets has expanded its product suite to become a fully integrated DeFi hub combining lending, borrowing, and more. In 2024 alone, Aries introduced several new features to better meet the needs of its users, including native USDT support, an incentive program, and more. Click the link at the bottom of the show notes, head over to Aries Markets, and tell them that I sent you. All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty aims to make it the most rigorously reviewed codebase ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap V2 and V3 without a single hack. So Uniswap V4 is dedicated to bringing that same level of security and transparency to the V4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there's a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today.
What do you guys, I mean, I think one thing, I would be curious to get your guys' perspective on this because I think it's been a pretty tough year for actually some of the liquid fund managers. If you remember back in 2022, it was like, why would you ever be anything other than, a liquid and directional was a very popular fund strategy because that was probably a time where you could buy everything and everything was going up. But I think it's been a tough year for a lot of the liquid funds that have frankly not outperformed Bitcoin in a lot of cases. And then the other, I think also this 4-year cycle that a lot of people have imprinted on their minds, especially for the crypto natives, is starting to, I started to hear a lot of like some of the liquid fund managers that I talk to say, oh, maybe this is a sell in May and go away situation, or how am I going to unload this stuff? And there's maybe like a little bit of a quiet consensus building around prices topping out. And I do wonder if just at the time when everyone has imprinted around the 4-year cycle, we actually get these massive moves, be it the market structure bill or the first pro crypto president, that's going to buck that cycle. And the market has a habit of making the most amount of people lose the most amount of money, right? And I could just completely see people getting caught flat-footed selling too early.
So here's a potential thought. What if all of the continuation of the 4-year cycle from last time, which was a 4-year continuation of 2017, where we are between now and 2017 is like not even a comparable. Like, it's crazy to think that was the industry back then, how far back that was. But what if all of the 2020, 2021 cycle didn't have actually anything to do with a 4-year cycle? It had everything to do with COVID and the fact that we printed $5 trillion and every asset in the world went up. It just happened to be that crypto moved faster. And so everybody imprinted this thought, we're continuing the 4-year cycle again. And so then it became, 2's a trend, 3's a pattern. It became a pattern. So then everybody is using pattern matching to suggest that 2025 will be the equivalent of 2021. And then we're going to drop just like we did in 2022. I actually think that the individual data points of why each one of those events happened, it was COVID as on the up, and then it was fraud and crime on the down. As long as we don't have similar things like that, I don't see a world that justifies a 4-year cycle just because that's the only argument that I've seen so far. It's just because. And I think there's actually more reason and more data that you can point to it not being the case based off of those facts.
Yeah, I mean, Trump is president for 4 years, not 1 year. So I think everyone's expectations need to be adjusted upwards. And like, imagine if the government wasn't run like just like a fucking group of idiots for like 4 years. Like, I feel like there's just so much of that base case that people have failed to realize. It's like all the executive orders, more energy, lower inflation, a better stock market. And like, I think in the next 4 years, the S&P goes to 10,000. I think that is kind of like the very macro call. And, I think people tend to say like the first and the third years of a presidency are generally the best years because the midterms happen on the second year and there's some kind of consternation. But like in the first year, what you can expect is all these bills to get done through reconciliation, which is basically a process where Republicans can push things through unilaterally. But, the other ones are the way the midterms are shaping up. I think the Republicans are going to take even more of the House and the Senate. And so like you'll probably have even more stuff getting done in the third and fourth year. And then, I think America is going to be in a really good place and things will be growing and we'll eliminate this existential threat of the debt. And like, I don't see interest rates going from 1% to 5%. I don't see another Ukraine war. I see the opposite of that. I see rates going down. I see the wars easing. And I see crypto getting to a point where the majors are so highly priced that the mid and long tail is going to be where all the focus is. So it's going to be very, very interesting. It's going to be very different.
Yeah, I think there's a lot of reasons to be positive about it. And it's just worth questioning priors because, I've had like 5 conversations in the last week about, hey, I got some early AI bags and thinking about unloading them and yada, yada. And I don't know. It's no longer... I'd have a hard time even articulating what it is. It's more my operator seat at Blockworks, but it's not behaving entirely as I thought it would.
I mean, the conversations that we have with portfolio founders is, and some of them are definitely thinking like, oh, I need to launch this thing because I need to hit the 2025 trajectory so that we can, get the notoriety. It's like, what if that base understanding is actually the wrong understanding?
Wrong.
And you should launch whenever you're ready, not trying to hit some market trend and market time. And like, you have founders who are like, well, the unlocks will be this. And like, what do you think the market will be in a year from now or 18 months from now when the cliff hits? And it's like, doesn't matter. If you're doing well, everything else is irrelevant.
Mm-hmm.
The other kind of things that are different this cycle and are leading us to question some of our priors are like, I remember when everyone was like, God, there's just so many tokens launching. Like, it's just going to be an onslaught. There's too many tokens, too many different types of tokens. I think what we've realized is like now the rate limiter of tokens is the tier 1 listings.
Yep.
And if you don't get that, the prognosis for you is generally not as strong. Or like you will have to revive your token from like a $300 or $400 million market cap to like, 2 or 3 billion. So I think like there's actually much fewer tokens launching than people think, especially on that tier 1 kind of marquee list. So I would say that's one thing that I'm questioning. The other thing that I'm questioning is just like this 50% to community airdrop idea. And like, especially within the DePIN category, like, does it make sense to give tokens to people who are not like building out physical infrastructure? Like just like give money to people just to create float so that you can list it? I think what you're going to see is people taking on these DePIN projects specifically longer to launch their tokens so that they can build out the infrastructure so that they can have the fundamentals so that they can legitimize the DePIN category. And I just tweeted about this, but like, I think one of the things that, is holding back DePIN is the fact that, Helium is just such a small market cap. It's $1 billion and it's the incumbent. You can't underwrite venture stuff to $1 billion. And I think a lot of that was caused by just like this early mining program where the float was mismanaged and all of a sudden, tokens are ending up in the hands of people who are not building out physical infrastructure anymore. And it's just like you can only launch a token once. And I think a lot of founders are starting to realize that, where unless you have a tier 1 listing path where you're like super high conviction that you can eventually get there, like there actually isn't that much of an incentive to launch a token. And even if your meme coin gets to 200 million, like there's not enough liquidity for you to take 2 million out. So a lot of things are kind of coming back to the drawing board in terms of like, how does this work? What makes sense?
I got a question for you guys. What do you think about this trend of not crypto like protocols launching tokens? Like Kaido is going to launch a token. And I would like I would assume, right? They're doing their, Yap score thing. You guys have probably seen this.
Yeah.
And there's going to be some sort of airdrop. I'm just assuming it's going to be a token that is.
I guess it's fair to talk about this at this point. But I was the person who, when I worked at Snapchat, was the one who explored whether or not we were going to launch a token.
Really? No way.
Oh,
what was that? What was that whole process like? I'm so curious.
Yeah, look, I mean, there was a very easy mechanism within the product, and I don't know how many people here are Snap users. I frankly have not been using it as much as I used to.
Neither.
But you had Snap Score, which was an ever incrementing value based off of your actions within the app. Certain actions were higher value, so you got more Snap points. But like, it's a very obvious way to just like convert that into an asset and have that be something that is distributed to all users. And it's like, it was the airdrop before there were airdrops, basically. And I think ultimately what we got to, I mean, there's a number of reasons why. It's like, well, why would you do this? Number one, but also number two, it could prevent you from going public. There's never been a publicly traded company that has launched a token. And so I think there's a bigger question as to, and maybe this is something that the market structure bill will at least be the first step in the process of solving. What is the value accrual mechanism for the entity that you're describing? And we think about this from a venture perspective. When we invest in a protocol, what ultimately we're doing is we're putting money into a development corporation, and we're also, getting access to tokens, through some construct. Ultimately, you have to make a decision. Are you trying to build a protocol or are you trying to build a company? And those are two very different paths. And I have yet to see anyone really successfully do both at the same time. I would say maybe the one example that we've seen so far that I think is still doing pretty well is Uniswap, the app and the wallet, versus Uniswap, the protocol. But and they've been first, so like they would be the best placed to be able to go after this dual entity construct. But it really is a question of I think everything in business can be boiled down to you show me the incentives, I'll show you the outcome. And if you have mixed incentives, it's really hard to have a unified outcome that's successful.
So you don't like the dual structure of having like the company equity plus the token?
No, I mean, at that point, what is okay? So you've got investors and employees who are incentivized by equity, and then you've got what is the token? Is it is it for governance? Is it? I mean, you could have sort of like truly zero value tokens that are used for governance, community interest and development, but then it's sort of like okay, well, are people buying the token because they think it's going to go up in value? It just opens up a can of worms, I think.
I agree.
Yeah, it's also like outside of the US, there is not a stock market anywhere. And so if you're international, this is by far the best way to get liquidity on your project. We'll see how these things come out, if they're valued as apps or if they're valued as like crypto monies. I don't think something like Cato will be valued as like crypto money, but it still beats just like having these private shares that you're sitting on and you're hoping to drive some value towards. Like at least you can put a buyback on there and express the value prop to a wider audience. And that to me is like the essence of permissionless innovation and frankly permissionless liquidity.
Yeah. All right. Speaking of liquidity, I want to ask you guys about Berachain here because there's
Boyko.
Yeah, Boyko. Give us the update. I probably am like a loose follower of just what's going on in Berachain. It's obvious that there's been a massive community build, and they've done super well, frankly. And maybe it's like one of the, I think one of the marks of a good L1 is being able to clearly point it and be like, there is this type of guy or gal, right? Like Bitcoin is the doomer protocol, like people like to eat steaks and talk about macro and that type of thing. And Ethereum, it's on your butthole and whatnot. And the Ethereum is, very much like an optimistic kind of dreamer, like very research oriented, and Solana's kind of engineering. And
the narrative world computer shifted back. We're building the world computer.
We're back. I love the world computer narrative. That's great.
Bring back Justin Drake.
Yeah. But
I think we love you.
Yeah, we do. And I think that Berachain is probably one of the few L1s which is defined, a type of person. I feel like I could close my eyes and imagine the type of person that Berachain attracts, and it's maybe a little younger, a little degen.
Close your eyes. What do you see?
I honestly see like a little younger, a little degen, fun, smart. Like is kind of like my kind of goes to parties, right? Like that's roughly what I would imagine is like kind of the Berachain vibe. We
party. Yeah, we party.
What would you guys? I mean, how would you guys define it?
I think the community is one of the assets that attracted us first to Berachain, and I think everybody who's listening to this probably knows, but we're investors in Berachain, excited about them launching hopefully very soon here. Look, I think there are kind of defined there is a defined ethos for every successful crypto project, but I think there's also kind of market narratives at the right time, and I would even say Solana had their market narrative of building the NASDAQ but on a blockchain. And we've talked about this, and the use cases, Totally says that there's 6. I think there's a lot more. And frankly, I think Berachain is like the counterposition to that, because I think Berachain represents not just an existing community of like the most insane, active, and excited people in crypto, but Berachain, in my mind, will become the consumer application platform. And I don't mean consumer in the like messaging and social media. I mean just like where all the users are. And if you want to trade, if you want execution, and you want low cost, there will be places to do that, and they will have Berachain will have low cost, and they'll have execution, they'll have all these things, but some of the most crazy and hilarious ideas for applications are some of the pitches that we get for people who are building on Berachain. Nobody's attracting that type of crazy out there idea to any other chain, frankly, and I think that is how I view it, which is it will have just a lot of experimentation in terms of applications. It'll have the basics. It'll have the restaking. It'll have the exchange. A lot of the concepts, that we know on ETH or Sol or anywhere will be enshrined, and that's one of the core economic advantages of Berachain. But I think it's going to be a place of experimentation, and if you can see anything from like a consumer application perspective, experimentation is the only way to find success. And there's like 250 applications that are already building on top of Berachain right now, ready to launch once mainnet goes live. But I see it as a place where people are going to test things, and then ultimately some of those things will work.
If I think about the stuff that's done well, at least in the past like 6 months, like virtuals and AI16Z, it's pretty clear that like the future demands like new and strange ideas. And that's how people kind of expand what they think is possible within their Overton window. And that's what crypto needs right now, is just like beyond price action is just like an expansion of that Overton window. And Berachain has that. It has like, what are the things that people really like about it? I would say it's a highly aligned chain. You don't have to deal with like the is pump fund good for Solana or L2 is good for ETH. It's like all fees are flowing in the same direction to token holders. It has culture and IP that can reach out to normies. If sports teams have mascots, it makes sense that a chain with a mascot would be able to reach out and touch people who are not super technically oriented. And then I think it frankly has a bunch of really strong backers that have diamond hands. And like you look at people who have held diamond handed the Bong Bears NFTs for like 3 years. It's like there's clear belief here. And I think that's a rarity today. A lot of the other chains seem a bit more corporate, and I'm not sure that's exactly what crypto wants today. And I think the proof positive now is like just the amount of liquidity. I think they've got almost 7 billion in Boyko, or I guess these are pre-Boyko vaults. Boyko
Right.
will,
These are pre
yeah,
deposits.
pre.
Could you just describe what Boyko is, by the way, for what I've been following?
So Boyko is the genesis of the proof of liquidity vaults that are launching after the chain and token goes live, and that will be the main coordination system to farm both the protocols on the chain, but also the chain itself. And the various primitives that are enshrined within Berachain, the Honey stablecoin, the lending protocol, and the DEX, those are all included there. But really, like you look at the amount of TVL that Berachain has, and I think they just crossed Hyperliquid, which is putting them, I think, top 9 of TVL for chains. And I think that's like pretty incredible. And, we don't know when the token or chain will launch, but there's going to be a fair amount of TVL that builds up before that. So we're not done yet. And if you can get 3 or 4 billion of TVL on this chain, I think it's going to do phenomenally well.
Nice. And is Boyko? I think I remember seeing is Jai from Jay associated with that from.
Correct. Boyko is not the Berachain team. It's just a partner who's doing this. But yeah, I mean, look, they're like imminently launching. Does that mean days, weeks? Who knows? But this, I think, is the thing that we're probably most excited about for the next, couple of weeks to months.
And can you guys just give a quick refresher as well on like the proof of liquidity, like the mechanism for? It's a very interesting idea. I mean, the part about it appeals to me is, I think that originally proof of stake chains were kind of designed. They're trying to incentivize you to do something, right, which is lock up stake and secure the network. And I think like there are other L1s that are experimenting with, well, maybe we actually want you to do other things as well. And this is where you see very different strategies from some of the foundations on different L1s to say, like, hey, maybe actually we're going to have a lower inflation rate because we actually don't want all the capital locked up and staked. Instead, we want to do things like incentivize you to borrow and lend or swap on the protocol. And so that's the kind of proof of liquidity. That is sort of what I see Berachain innovating on here. But can you just describe again, like the proof of liquidity mechanism and what it kind of incentivizes on the chain?
So there's a great article on it. It's called Berachain DeFi Playground or something else. We'll link it in the show notes. But effectively what Berachain does is when you stake, you actually have to direct liquidity towards a primitive on chain. And so by staking, not only do you secure the chain, but you also bootstrap liquidity and fees for the applications on that chain. In exchange, those applications have to pass back fees towards Bera stakers. And so you can think of the valuation of the Berachain chain as, add up all the fees from Maker on ETH, add up all the fees from Uniswap, all the derivatives exchanges. All of those fees are flowing back to Berachain holders, which will be kind of the thing that it's valued off of. And Berachain for us is like a proto money, in terms of that is how the asset itself will likely be used on chain, is like this hyper incentivized pool where everything is paired with BGT. And that's how people kind of think about the chain. The other aspect of this is just like the retroactive funding and requests for liquidities that the community puts out. Uh, the Optimism retro PGF funding rounds have done extraordinarily well in bootstrapping their ecosystem, but have kind of hit hiccups as they've tried to scale it or keep it going. This is a perpetual funding platform for applications on chain. And then I think the last thing is just like the relationship with Berachain and its L2s is very different than ETH and its L2s, where it's kind of more of the Polkadot style model where there is a proof of liquidity concept where you actually have to stake Bera to be one of the L2s. There aren't infinite L2 slots. And so those are kind of, accretive towards the BGT as money dynamic, and also just like bootstrapping activity and proof of liquidity on those L2s. So that's the very, very high level. Go for it, Mike.
Just like one additional point to clarify is, the fees flow to Bera stakers. The Bera stakers point their stake at these applications or these primitives, and then the inflationary rewards are what go to those applications based off of their stake. And so it kind of like flips the economic model around in terms of you stakers get inflation. It's actually applications get the inflation, and they want to incentivize more stake so that they can get more inflation.
It's a very interesting design in general. And yeah, I mean, whenever it launches, which again is Q5, so hopefully sometime
We're in the zone.
We're in the zone in the near future. It'll be very interesting to see, some of those very cool, like just experimentation that happens on the chain.
And the last thing I'll say is like crypto has probably not seen a well-distributed wealth effect since Solana ran. And I guess that was almost like maybe 2 years ago now. And like you saw how much economic activity a new, or I guess in Solana's case, like an existing L1 that was at 2 billion going to 100 billion, it bootstrap pump fund, it bootstrap meme coins, it bootstrap all these new primitives. Like it wasn't just people getting rich. I think Sui frankly has like less like real users or like real people holding the token, where like that wealth effect has not been as perceptible, I guess.
Mm-hmm. Yeah.
So I would say that the cycle really starts when the new L1s start, because the wealth effect that's driven by that can be so accretive to the underlying chain and also the assets that are on it. And if you look at the actual Boyco deposits, like a lot of it's BTC, a lot of it's ETH, a lot of it's stablecoins. Like there's a good distribution of very active capital that are also riding not only the rise in restaking and staking for ETH, but like the Bitcoin staking and restaking landscape as well has grown a lot. And that is just a tailwind that, frankly, if you can bridge that TVL to your chain, it just becomes native assets that are willing to bid, things that are there.
If you have it up, Vance, I'm curious what the total number of people who have deposited are, because I think that's the other angle here too. It's like, when Eigenlayer launched their restaking capabilities, if you were staking within Wrap State ETH, or if you were staking within, any other staking provider, you could just basically like loop, and you had a number of very, very large deposits because of that. Last I saw, it's over 110,000.
Yeah, it's 140,000. And, Wrapped ETH is 350 million of the 1.7, but like BTC is like almost 800 million. So there's like roughly equal amounts of BTC and ETH. And I think you're also riding this like Bitcoin Renaissance trend, which is cool.
What is, I would be curious, have you guys looked at all at the Bitcoin L2 ecosystem? And it's something that I kind of poked out a little while ago, but haven't dived super deep into. And I read John Trarb's piece on Strata, the bridge from that Alpin has been developing, and I don't know. I mean, it seems certainly interesting. But
I think there's a pitch, and the pitch is probably better suited to, frankly, less crypto natives. Maybe this is financial institutions, maybe this is nation states and the pitch is essentially secure your application or your ecosystem or your chain with Bitcoin. the most distributed and decentralized and largest crypto asset. And we're excited about Babylon, which is going to be basically restaking for Bitcoin, and they'll have the concept of AVSs on top of there. But there are a number of other L2s that are building on top of Bitcoin that I think will leverage this concept in and of itself. It won't look and feel like Base going after consumer applications within the crypto native ecosystem. Like that feels a very different kind of narrative than what I think Bitcoin L2s will go after, which is a lot more non kind of like DeFi native, degen native audiences, which ultimately is great because we need to be able to move past the insular nature of this industry. But they're the ones that we are working with at least are getting reception at frankly the nation state level.
Super interesting. I mean, this is the old Bitcoiner thing that every L1 is a test net for Bitcoin DeFi, and things are built on L2. So we'll have to see.
Infrastructure, issues basically that they need to solve. Not to say that they can't, but that's frankly what they're working on. And you need to be able to get the chain into a place where you can have the same activity that it exists on it or is secured by it as you would have on the world computer. So there's still a lot of things to solve, but it could move more in that direction.
The key problem with Bitcoin DeFi, and like we have invested in a lot of it, is just like the capital has been idle for so long that it's hard to reinvigorate it. And like, think about someone who staked their ETH at like $500, and now it's at 3,400, and like people are looping it, and like that is money. And like part of money is just like the wealth effect that gets generated along the way and your comfort with using it as an asset. And like Bitcoin, I think we're seeing the early innings of people starting to use it, but it's kind of unclear if they'll actually get there. And like maybe a smaller scale example is like Sui, which is nearly a $50 billion coin, but like even the native TVL on their DeFi is like $1 billion. It's just like if people haven't used it to some degree, like they won't use it. The activation energy to get them off the couch is like very, very difficult.
Yeah, it's very high. And that's probably been this, comes down back to the, type of guy or gal that holds Bitcoin is you've been told that, because you can't do anything with your Bitcoin. There's no smart contracts on, main chain. So if there's nothing to do, the only thing that it makes sense to tell people to do is to hodl, right? So you've been indoctrinated with that idea for a long time.
And this is, I mean, I remember having this conversation with, notable founders in the space who everybody would know their name. I won't blow them up, but they're like, oh, what's in your like doomsday bag, or like what's in your 10-year bag? And I was like, what do you mean in 10-year bag? It's like, what crypto assets do you just like have in a ledger wallet that's in a safe deposit box that you have no access to, and you just like send assets to, and you're like, I'm gonna hold on to these for 10 years. And increasingly the case is I don't think that you can have anything that you can justify from a holding perspective that is like I'm going to come back in 10 years and see where it is. Like, yes, ETH, maybe one of them. Bitcoin is basically the only one that I can think of where you can say, okay, I'm just going to send this Bitcoin to my Bitcoin address that's in a safe deposit box in Timbuktu, and I'll check back in 2030 where it's at. And I think that is the mentality of a lot of people, especially when the narrative of the archetype of person is like the doomsday people. It's like, well, I'll check back when that doomsday happens and see where the price is. But I think basically all of the rest of crypto, you can't approach it like that, and most people have not approached it like that.
Last question for you guys. This is something that one of our analysts tweeted out and noticed actually, but the stake rate on Ethereum has moved for the last couple of months, has been moving in the opposite direction. So basically, and I think this is a somewhat interesting trend because it kind of kicked off all of these concerns around Lido, especially, and the liquid staking dominance that Lido has. But actually, Hasu put out an update to Goose, which is basically the North Star set of strategic objectives for Lido, where he outlined that Lido has actually been losing market share in the LST game. It's still very dominant, but losing market share as there have been new entrants and there's more potentially institutional staker that can't use something like Steth. And now you're seeing the stake rate move in the opposite direction as well. And I don't know. I mean, I have always, my personal opinion on this debate around Lido dominance is I've never been as worried about it as everyone else or like that camp was. I just think that
the market is going to get much larger and much more heterogeneous, and stakers are going to have different sets of preferences. And it would make sense to me that Lido's dominance would naturally go down over time. And it's interesting to see the stake rate reverse as well. So I don't know if you guys have a sense of what's driving that, but I just thought it was an interesting data point. So
I think honestly, what the reasoning is people are looking at other attractive yield opportunities, and like this turns out the economics and the expectations around basically like stake rate drive these numbers, and 3, 4, 5% depending on what GWEI prices are, but I think there's probably you can probably point to a direct correlation between what average GWEI has been, and then what the lagging indicator of what's the stake rate on ETH. And if it's not very high, it's not going to be as attractive as putting it into something else. And I'm also sure that as the bull market picks up, people will just be looking for other assets to go off and speculate on. This is literally the wealth effect that we're describing.
Yeah, yep. I think so too. All right, fellas, that's basically it on my end. Anything else you guys wanted to chat about or cover?
No. Thanks for another good one.
Yeah. Ears peeled on Bera.
Yeah. Keep them peeled.
All right. Will do, fellas. Will do. All right. See you next week.
Hey, everyone. Don't forget to check out Aries Markets by following the link in the show notes below. After deploying on Aptos in 2022, they are now the ecosystem's largest lending protocol and the perfect place to get started with Aptos DeFi. Thanks again to Aries Markets for sponsoring today's episode. We'll see you next time.